Hi, I'm Jeffrey Roach, Chief Economist for LPL Financial, and in this edition, I will highlight three key factors at play in the global macroeconomy. First, the U.S. needs Japan to keep buying. Japan is the largest foreign holder of U.S. treasuries, and the U.S. needs to keep Japan's demand for our debt as robust as possible. So Japan runs a large trade surplus with the United States and has accumulated significant foreign currency reserves, especially in U.S. dollars. Further, U.S. treasuries are the world's largest and most liquid government bond market, making them a natural place for Japan to invest those reserves while preserving capital. Investors need to be aware of any shifting trends within Japan, but for now, Japan buys treasuries because they're the safest place to invest its dollar reserves, and the treasury market is large enough to absorb Japan's significant overseas investment flows. Second, financial conditions favor the U.S. In this chart I'm showing, you see that the U.S. has the least financial stress among both developed and emerging markets. Values below zero imply financial markets are below average stress levels. While all three lines are below average stress, the U.S. is ranked with the lowest stress right now. Is it a bit of complacency? Well, that's possible, but at this point, investors are looking past the near-term headwinds. Third, inflation conditions improved since May. Although the Federal Reserve is still concerned with the pace of consumer inflation, we've seen some improvements. Conditions in February were quite promising as the trajectory implied that inflation was indeed heading toward the 2% target to be reached by early next year, if not sooner. But then came the Middle East conflict and a shock in oil prices. We hit the highest inflation metrics in May, but since then, we've seen some improvement despite the on-again and off-again agreements. Looking ahead, one of the most important things right now is if 2- and 5-year inflation expectations remain well anchored. If so, then we may have averted larger disruptions. Well, that's all for now. If you want more insights, follow us on social media and take care.